Stablecoins are where MiCA gets truly serious. They're no longer just trading chips, they're becoming payment rails and potential money substitutes. In this module, you'll see why regulators care so much and what that means for your product design, risk decisions, and overall strategy. Crypto's wild swings and broken pegs didn't just burn retail users, they scared central bankers. Regulators now treat stablecoins as forms of private money. MiCA's mission is to turn speculative experiments into boring, reliable financial infrastructure that people can safely build on. When MiCA looks at stablecoins, it doesn't actually use that word. It forces you into one of two buckets. If your token is backed by a basket of different assets, you're an asset reference token, an ART. If your token mirrors a single official currency, you're an e-money token, an EMT. E-money tokens are basically digital cash. One token tracks one unit of a specific currency, like a euro. Because they sit so close to real money, MiCA treats them strictly. Only licensed banks or e-money institutions can issue them, mainly for payments, settlement, and remittances. Asset reference tokens are more like a digital basket of value. A single token might track a mix of euros, gold, and Bitcoin to stay relatively stable. Because that starts to look like private money, regulators treat arts as sensitive. Under MiCA, issuing them triggers stricter authorization and deeper white paper scrutiny. MiCA doesn't see all tokens as equal. Some are just another product, others are systemic. Cross that significance threshold and you're no longer a niche startup. Regulators see you as financial plumbing. From there, oversight shifts up to the European Banking Authority, and expectations around risk, governance, and resilience increase sharply. For MiCA-style stablecoins, the reserve is the engine room. Three ideas matter. First, segregation. Reserve assets must be held separately from the issuer's own money. Second, insolvency remoteness. If the issuer goes bust, other creditors can't grab the reserve. Third, liquidity. Reserves must be cash or very liquid assets, so redemptions can be honored quickly, even under stress. MiCA gives stablecoin users one powerful promise and one hard limit. The promise: you can redeem one token for one unit of the reference asset, quickly and reliably. The limit: issuers can't pay interest. That keeps stablecoins positioned as payment tools, not high-yield competitors to bank deposits. Under MiCA, your real firewall isn't the code, it's the people running the business. Regulators look closely at who sits in key roles, how decisions are made, and how conflicts are handled. Strong governance, clear accountability, and robust risk and IT controls become core product features, not afterthoughts. Choosing the issuer path means you're not just using stablecoins, you're building core financial infrastructure. You gain deep control over pricing, user experience, and treasury strategy. But you also accept bank-like obligations, capital buffers, audits, and close ongoing supervision. With a partner strategy, you focus on wallets, apps, and user experience, while a regulated issuer handles the heavy lifting on the stablecoin or payment side. You trade some control and margin for speed, simplicity, and a lighter regulatory load under CASP rules. The key question is, do you really need to be the issuer, or can you win by orchestrating great UX on top? MiCA is quietly changing how traditional finance views crypto. Banks aren't afraid of crypto technology anymore. They're afraid of assets that sit outside clear rules. By standardizing stablecoins, MiCA turns them into instruments banks and regulators can model, price, and supervise, unlocking partnerships for custody, issuance, and settlement. MiCA treats certain behaviors as absolute red lines. Wash trading isn't growth hacking, it's faking volume and will be pursued as market manipulation. Insider trading turns private roadmap knowledge into an unfair edge. Misleading white papers or disclosures poison trust at its core. Leadership's role is to make it explicit. We'd rather miss a short-term pump than cross these lines. Here's how to turn this into Monday morning action. First, classify your tokens and services. Are you closer to utility, ART, EMT, or securities rules? Next, run a quick gap check against MiCA's disclosure, governance, and customer protection expectations. Finally, pick one concrete improvement. Usually the white paper or governance. Assign an owner and a deadline, and track it at leadership level. MiCA turns stablecoins from a wild experiment into regulated financial plumbing. Your edge is choosing to lean into that. Use clear classification to design products. Use authorization as a moat, and use strong governance to earn durable trust from institutions and regulators.